Hello everyone. The Q2 result season is finally over and we have seen some very good results from companies in Indian share market. I have analyzed a lot of these results and in this video I'll share with you the methods that I have used and also the top 5 results each from large, mid cap and small cap segments. This is just the analysis that I have done. There could obviously be several companies which I might have missed out on, so the purpose of this video is to bring to you the star performers of the Indian share market after Q2 financial year 26 result season. So let's get started. Before moving on, please read the entire disclaimer carefully. This video is for educational purpose only. There is no buy, hold or sell recommendation in this video. So first of all, let's have a look at the metrics and the methods that I have used for this analysis. There are broadly four metrics based on which I have analyzed the results. First is the sequential quarter on quarter growth and consistency. This metric is used to compare the current quarter's result, that is Q2 financial year 26, to the immediately preceding quarter's result, that is the last quarter, Q1 FY26. This removes the potential distortion caused by one time events or an abnormally low base in the previous year, that is year on year comparison. Strong sequential growth across multiple quarters suggests a solid, sustained, and accelerating business trajectory. This look for companies that have shown continuous growth in both revenue and profit for last few quarters. Okay. The next metrics is the year on year growth. This metrics analyze the change in the financial metrics like revenue, profit, EPS for the current quarter, that is the Q2, compared to the exact same quarter in the previous fiscal year, that is Q2 of last year. Comparing the same quarters removes the impact of seasonality. For example, high sales during festivals, cyclical demand in specific months, providing a clean view of the company's true structural growth trend. It is the primary indicator of how well a business is scaling its operation and capturing a large market share over the longer term. This metric is the most closely watched by the general market and analysts to gauge the company's progress amongst long term targets. Consistent year on year growth in revenue and profit often signals a healthy expanding business. Ideally, revenue growth should be accompanied by equal or greater profit growth. If revenue grows faster than the profit, it can signal margin pressures. And if profit grows much faster than the revenue, it might indicate a non recurring income boost. This metric look for companies whose year-on-year growth rate significantly outperforms the industry average, indicating market share gains. So very important metric. The third metric that I have used is the operating margins, that is the EBITDA margin improvements. Now this metric analyze earnings before interest, taxes, depreciation and amortization as a percentage of revenue. This shows how efficiently a company is managing its core operations before accounting for financial and tax decisions. A company can increase profit just by selling more, that is revenue growth, but if its margins are improving, it means that it is getting more profitable per unit sold. This indicates superior cost management, operational efficiency, and pricing power. This metric look for companies that report year on year and quarter on quarter margin expansion, especially in uh, inflationary environments where cost control is paramount. Okay, and the fourth metric which I have used is the management commentary and future guidance. This is arguably the single most important metric. The official statement and guidance provided by the CEOs, CFOs during the post earning conference calls and press release. The result that the companies share are historical, but the guidance is forward looking. The market values a company not just on what it has done, but also what it will do. This metric is used for analyzing the companies with clear guidance on future revenue, margins, and capital expenditure. For capital goods and infrastructure companies, strong growth in the order book suggests strong revenue visibility for the next 2 3 years. This metric wakes in the management's high confidence in their specific sector or segment. Okay, so now let's move on and look at the top five companies in the large cap segment. So the first is the Larsen and Tubro (L&T). The key takeaways based on the results of Q2 are the 16% year-on-year net profit growth, which is validated by record order book of 6.67 lakh crore rupees order book. Huge, humongous order book. Next is BPCL. Now, BPCL has reported 118% year-on-year net profit growth, which is driven by massive margin turnaround in refining and marketing. So these numbers are astronomical numbers if you consider that these are of large cap companies. 118% year on year net profit growth for a large cap company. Amazing. Let's move on. The third one is Tata Steel. At least some good news for the Tata Group. 319% year on year net profit growth, which is driven by 45% year on year EBITDA surge, which is a margin which signifies margin expansion. So again, unimaginable 319% year on year net profit growth for a large cap company. Extremely good results by Tata Steel. Let's move on to the fourth one, and the fourth company is Bharti Airtel. Consistent EBITDA growth with high quarter and quarter revenue and sustainable average revenue per user increase. Now, Bharti and Jio, so this is a duopoly at the moment. Vodafone Idea is nowhere even near. So, and Geo is not listed as of now, the Reliance Geo. So, Bharti Airtel, I would say at the moment is a monopoly in this in its sector in the share market. So, extremely good results for Bharti Airtel as well. And the fifth company from the large cap segment is the Mahindra and Mahindra. 22% year on year revenue growth, sustained high margins, and leadership in core segments. Without a doubt, Mahindra and Mahindra is has shown very good results. You can check the shares price as well. It just keeps on rising and rising. So very good result, very good performance by this company in the share market. So these were the five top five large cap companies. Now let's move on to the top five mid cap companies. So in the top five mid cap companies, the first company is the BSC. BSC has shown 61% year on year net profit growth with exceptional EBITDA margin improvement to 64.7%. Now it's a very good result. We have seen a major correction in BSE stock price, but since then it has given exceptionally good results, and the quarterly results too are extremely good based on all the four metrics that I have used for this analysis. Let's move on to the next one, which is the Tega Industries. Tega Industries has reported 543% year on year net profit growth, which is driven by major operating margin expansion 10 to 17%. So, unimaginable 543% year on year net profit growth. Very good results. Next is Mazagon Dock. Now, Mazagon Dock, it has shown multiple year order book ensuring strong future revenue visibility and execution. So, the year on year and quarter on quarter growth is nothing exceptional, but their order book has multi-year projects in it. So very impressive and very positive future ahead, I guess. So let's move on to the next one, which is the Ambuja Cement. Now Ambuja Cement has came out with 364% year on year net profit growth, which is driven by successful cost management and volume scaling. So Ambuja Cement was a surprise, at least to me personally. I was not expecting a cement company, that too Ambuja Cement, to come up with such good numbers in its quarterly results. So kudos to them, very good numbers. And the final company in the mid cap segment is Cummins India. Okay, It has shown strong year on year and quarter on quarter growth, which is driven by margin improvements and domestic demand. So, this is another important point, domestic demand, which means that all this crazy thing going on for several months now about this tariff and all. So, if any company is showing strong domestic demand, so it actually shields it from that tariff thing which is going on for so many months now. So very good results from Cummins as well. And the let's now move on to the final segment, which is the small cap companies. So top five small cap companies. First is the Vikram Solar. Now Vikram Solar has just came up with their IPO, and they are at the moment trading way below their IPO price. Okay, let's see what are the key takeaways from their quarterly results. So 1729% year on year net profit growth, which represents a massive turnaround in margins and execution. Vikram Solar is dependent a lot for their revenue on US and other markets, and probably that is the reason why this company is not performing at the moment in the share market. But it based on these results, I can confidently say that this is just a matter of time before it changes the direction. The stock price changes direction in the Indian share market. So very good results. Next is ASM Technologies. Now ASM Technologies has reported 850% year on year net profit growth with a strong quarter on quarter execution and new contract momentum. So good year on year, exceptional year on year profit growth, good quarter on quarter execution, and a new contract. So everything is lined up for this company, it seems, ASM Technologies. Let's move on to the third one. Third is the Raymond Reality. Now, Raymond Reality has reported 1100% year on year net profit growth and 208% year on year revenue, which shows rapid project scaling. So, again, a very good and a surprising entry, at least for me, in this list. Very good results. Number four is Jyoti CNC, robust quarter on quarter growth and a 4,546 crore order book, providing very high visibility. So, this is a small cap company, and a small cap company with 4,500 crore order book is a huge thing. Okay, and the last of all the companies is basically the fifth company in the small cap segment is the Cupid Limited. Cupid Limited has shared the results, and as per that, they have shown 140% year on year net profit growth, which is validated by strong margin maintenance. So another company with very good results. So I guess that is all from my side in this video. Thanks for watching it. And if you've liked the content, then please like, comment, and share, and subscribe to the channel. Goodbye and happy investing.